Is it finally happening? Are the BRICS launching their own gold-backed currency, the unit? Well, we've talked about it on this channel before, and some evidence has surfaced just in the last 24 hours that gives us a little more evidence that things are happening. But we have to take a closer look at it because it does feel like a hoax as well. And I'll get into the details here in a few minutes during this weekly wrap-up. And with that said, thank you so much for joining us here for a Soar Financially weekly wrap-up episode. My name is Kai Hoffman. I'm the EdJR mining guy over on X, and of course, your host of this channel. And I've prepared a really, really interesting overview of topics that kept me busy this week that I just quickly want to run through with you to give you an update on what we've been looking at, what are we focused on here at Soar Financially, and sprinkle in some of my own opinion here, of course, as well. I think that's why we're doing these. Let's dive right in because we got so much to talk through. And as always, let's take a look at the economic calendar real quick. What sort of data has been provided to us? As you know, we mostly look at U.S. data because it's so market shaping. This week, mainly yesterday, actually, Friday, the Michigan consumer sentiment, which was surprisingly more positive than perhaps expected. The fall numbers, September, October were more negative, and we were questioning whether that would translate into a weaker Christmas shopping season. So far, we haven't really seen a drop in spending. Question, of course, though, is that just inflation driven, or is there real spending increase happening from the consumer? Personal income, personal spending here as well. But most importantly, the core PCE number. That's one of the gauges that the Fed uses, of course, to say, hey, we're on track here with our inflation targets, or hey, we got to steer against this. Let's take a closer look. And the PCE number for September, of course, massively delayed. We're already December 6th as I'm recording this, so you know it's the late data. It's a lagging indicator, as we like to say here on this program. It's not really that accurate, but it gives us a bit of an idea of what the trend is. And it's the PCE index, the PCE price index, is flat, 0.2%. Inflation from the previous, over the previous year, the index rose by 2.8%. So we're within that inflation range that the Fed has been using. It's not really breaking out. It has slowed down. Tariff impact has slowed down as well. We've seen more impacts here in June, but that's pretty much it. Underlying inflation seems to be in check, 0.2%. I think inflation that is fairly normal. So no outlier there. That would change any Fed rate cut estimates, of course. And one thing I forgot to click on is here. Let's take a quick look at the consumer sentiment. As I mentioned in my last update last week, we were looking at a declining consumer sentiment ever since July, from 61.7 down to 51 points. So that's a 10-point decline, but it has rebounded a little bit. We'll have to see what that does to Christmas shopping and to consumer spending over the Christmas season here as well, because as we all know, for many retailers, it's the busiest season of the year, and once they start reporting here in January, we'll get a clearer picture, of course, and how the economy is doing overall. So that said, I think that's the economic indicators. We talked PCE and consumer sentiment. Let's take a look at the markets here, and let's take a look at the S&P 500 first. We're trading near record highs again. The Fed rate cut expectations have propelled the index higher yet again. It has moved almost over 300 points recently. We thought we were looking at a breakdown, but it seems like the level of 6,500 points held, and now we're looking at near all-time highs in the S&P 500. We are mere points away from it, and there's no stopping this trend, quite honestly, unless we see a breakdown or the Fed may be surprising us here on Wednesday. There's no change in trend. Kevin Hassel, one of the Fed governors, who's the front runner in the Fed replacement campaign here for Jerome Powell, he's of course he wants to lower rates, and we've shared that on our X feed. There's no declining. There's no stopping this S&P 500 train, of course. And the market, and let's take a look at the VIX here real quick as well, because that's a really good indicator. Like, how nervous is the market? Should we be worried? And the market is very, very calm. If you look at it, the market, same as over the summer, we're back down to 15.4 on the VIX. We had a bit of a breakout here, and that's when the S&P 500 dropped down to 6,500 points. But it has recovered since. It has stabilized, and there seems to be no more fear going on. The fear and greed index is the other one I do want to share with you. Let me bring that here up on screen. because it does share some interesting indicators with us. So where are we here on the index? We're back almost in neutral territory. The gauge has shifted back up to 40. Previous close, of course, fear. Week ago was extreme fear. So we've come around ever since, Fed rate cut expectations or have massively increased, and we'll look at the percentage here in a second. The market momentum, primarily, we're trading above the 125-day moving average. We tested it. We got close to testing that, and it didn't break down. And that was really important, because if that would have broken down, then I think extreme fear was warranted. It would have been warranted, because then we could have seen a bigger correction, perhaps down to further lows here, more down below the 6,000, maybe 5,800 point range. So stock price strength, that's one thing we've always been concerned about, is a few big stocks can skew returns for the market, and that has not changed. If the Max 7, or what is it now, just the big companies here, the AI stocks, start falling down, like the Nvidia has corrected recently a bit, then the overall stock market is in dire or under constraint, and extreme fear is absolutely warranted. Put and call options, let's take market volatility. Sort of what I said about the VIX, it has dropped below the 50-day moving average, and it is a well-known, of course, measure here for market sentiment, and it seems like we're back into calm territory. Neutral is here the what do we call the rating that CNN ascribes here, and we're back in the greed sector. Stocks are riskier than bonds. We have seen bond yields actually drop, so people are selling bonds, going back into stocks perhaps for a year-end rally, and that's what we're seeing in the bond yields. Let's take a look here. Let's share this. I've shared the VIX here before. Let's take a look at the US 10-year. It is actually rising again. We're still in a band here. We haven't really broken out unless the 10-year breaks out above this 4.18 level and maybe rallies back to 4.3. This just looks like a temporary correction, but in the scheme of things, it is a correction. But why is that happening? Well, money is moving back into the stock market. We've seen it. It is happening. So that's a factor. Let's take a look. What else have I prepared here? VIX Fear and Greed Index we talked about. That's the market moving news. Maybe I showed you the 10 years. The S&P 500 we looked at as well in comparison. So S&P 500 is moving higher versus the 10-year on the 10-year bond yields. So actually, the chart looks identical, but in this regard, it means that people are selling their bonds and moving into stocks. So that's sentiment. I want to share this with you because it's a topic we've discussed here on this channel. Simon Hunt and many others is the geopolitical side. India plays a very interesting role in the geopolitical landscape. Yes, they're a part of BRICS, but they're fairly neutral. I'd say, and I've called them the Trojan horse within the BRICS before, because the U.S. has a relationship with India as well. Now, you see the photo here. Premier Modi met with Russia's President Vladimir Putin this week. They had a 2-day meeting, and there were some takeaways, because they have strengthened their economic and strategic relationship as well, really enforcing this multipolar approach that we're seeing globally. Not really focused, and as I just said it, we're not focused just on one partner, meaning the U.S. We are working or moving towards a multipolar world, and yes, they're making dealings with Russia here, and they will be processing Russian oil. So that's something that probably will sting the U.S. as saying, hey, we got sanctions here on Russia in regard to oil and the oil trade, and I wouldn't say they're circumventing them, but they're paving their own way, which is their absolute right, and nobody has to follow what the U.S. is doing. But it's defeating the purpose, of course, of sanctions if the BRICS are keeping Russia alive, and while we the West impose sanctions on them to sort of stop their economic engine, meaning the revenue generator, to keep maybe the war in the Ukraine going. Right, so that's sort of defeating the purpose. They do have a bilateral trade target of $100 billion. There's some Russia promised uninterrupted shipments to India for oil and natural gas, or other energy sources as well. A deeper cooperation in defense, nuclear, and high-tech sectors was discussed. It's really like a strategic signal to the West. It's like, hey, we're moving into a multipolar world. We can do business with whoever we want. I think that's the main message here, and we'll see if we can get a Simon Hunt or so on the program in the coming days to sort of discuss this in more detail. How important is this meeting? Are we blowing this out of proportion, or is this an interesting shift that we're seeing, or a continuation of a trend that we've been seeing all along? Of course, it is that multipolar push versus Western pressure. I think that is really key here. So. Something we're monitoring on the geopolitical side, because India is, of course, a big gold buyer, a big part of the BRICS, and I think it's really important to highlight. So, going through my notes, I just want to go through it in chronological order. As you know, we discussed the macro to understand the micro, and the macro is first. What's happening in the U.S. economy, what's happening in on geopolitics, and now with everything I've discussed on the market side, we do need to take a look real quick at the Fed rate cut expectations. About a week ago, wondering if there's a chart, historical. Sorry, I'm just trying to find something real quick because I want to show it. It is not what I was looking for in terms of historical. I apologize, but I was trying to find, like a week ago, it was about 10 days ago, this was only at 30%, meaning the rate cut expectations were only at about 35%, and they have jumped up. We've heard from various Fed governors that they do want to push rates lower. Kevin Hassett mentioned earlier. Chris Waller spoke. I shared that video with you last week. So we're still in that territory. Nothing's changed. 86%, although 13.5%, 13 or almost 14%, it's not to be underestimated. Would be interesting to see what happens if the Fed says, like, well, no, we're done cutting rates. Labor market is fine. It's cooling down. It's not as hot as we expect. Although I admit I don't expect that to happen. Like, based on what the Fed has been saying and what the Fed governors have been pushing for, I think one cut is very likely. The market is also pricing in 2 more cuts for next year now. So that's something. I have one more thing to share on that topic, and I really enjoy following the Kobasi letter here. And they shared something, I think it was 3 days ago, December 3rd, 3 days ago. Shocking stat of the day here. Interest costs on U.S. debt are now equal to 24 cents of every dollar in U.S. government tax revenue. That is crazy. That is an insane amount. This comes to as interest expenditures reached $1.24 trillion over the last 12 months, an all-time high. We've been talking about it, like we've talked about breaching the $1 trillion mark. We're over $1.24 trillion. It is exploding, and of course that's why the pressure on the U.S. on the Fed is so high to cut interest rates, because it is getting bloody expensive for the U.S. to sustain their debt levels. We'll see where that goes. They're supposed to be independent, but you cannot ignore $1.24 trillion just in interest expenditures alone. So we'll see where that goes. The government needs to lower interest rates rather more than anyone, of course. That I think is the obvious one, but is the way to safety 0% interest rate? There is a whole butterfly effect being triggered once that happens. So. I mentioned it in the intro. Just over the last 24 hours, a certain topic got more momentum that we do need to address. And I've spent quite a bit of time this morning in preparation of this weekly wrap-up looking at this. It is the topic that the unit is being brought back to our attention. Of course, we've had this topic on our channel in the past. It is supposed to be a gold-backed currency to be issued. Lot of reports floated, and I've really struggled to even bring this topic up because I'm still trying to verify it. Vince Lancy, Pepe Escobar, and many others brought that topic back up just on Zero Hedge, and maybe I'll share these articles real quick. The first one is here. Let me just put this on the screen as well. Apologies. There we go. The first one is the BRICS gold-backed unit has been successfully launched by Goldfix. That's Vince Lancy. And we've all been talking about it. I think you can all read this. And he put up a video up on it where he runs through the reasoning and what's happening behind it, followed by only this morning, actually, only about 6 hours ago, Pepe Escobar put something up as well about the unit project, and lays out his theory about it and what is happening behind it as well. And I've looked at it. So as I said, I've really looked into this because it's an interesting topic, because it could really change the global monetary system. It is a massive development, and I've found a few links and project websites that have me honestly worried. I'm not saying it's a scam. I think it might be in its infancy, but I don't fully understand it either, which has me worried. And that's where my concern comes from. So there's a website which Vince Lancy also in his video mentions is like, we leverage gold and BRICS plus currencies into a unit ecosystem. Okay, fair enough. I think that's what we've been talking about. And also, just there is an International Research Institute for Advanced Systems, and I'm mixing things up here because it's both because the unit, the website, I got ahead of myself here with this website, is relying on this here, and the International Research Institute for Advanced Systems. So who are they? It is actually a Russian-backed research institute. The member states are Bulgaria, Hungary, Mongolia, Cuba, and Russia. Okay, great. First question mark. Does Russia have enough gold? I know they've been buying silver a lot, and we all know that, but do they have enough gold? And based on the member states, I'm missing China, quite honestly. Like, okay. They're talking about it. Oh, let me share this here. Sorry. We got, as I said, we got Bulgaria, Hungary, Mongolia, Cuba, and Russia here. I'm missing China. They got the gold. Somebody needs to deliver that gold into the system. And I think without China here, it'll be very, very difficult to do this. Again, question mark. Still topic I need to find an answer for. Irias announces the launch of blockchain-based unit token on Cardano. Okay, fair enough. We're launching a token that's all digital on Cardano, which is a blockchain network. Okay, fair enough. Interesting part, of course, diversified basket of international currencies is supposed to make up 60%, and then gold, 40%, combining the stability of traditional assets with the transparency of blockchain technology. I think we talked about this with Andy Schechtman on the program, right? So the unit token, perfect. All right, tradable, transparent, verifiable, solid. I don't know enough about Cardano to say whether this is legit or not, or like legit. It is legitimate, whether it's good to be able to do this. I don't know enough about it, and that's sort of where the news ends. The news announcement ends. We don't get a lot more information, right? So let's jump over. Let's jump over to the unit website again, and I have a lot of question marks about this. This is what gives me the biggest headache, quite honestly, because it starts with these member countries. Looking at them, like we just saw, Irias is really only Russia here from the BRICS Plus members. Okay, that are part of this. Yes, early days, I get it, but it feels like there's something missing in between. So scrolling down here, and I'm trying to figure out who's behind this, right? Like, okay, who's launching the unit? And it feels like it's a group, maybe some Russians, might be. It feels very unbalanced. So Ji Luo, he's an AI CEO. So he's an AI. He's not a real person, okay? And after many considerations, we concurred that unit needs a totally new form of representation. AI strengthens our collective consciousness with perfect memory, thoroughness, and depth. Who's programmed this AI? Like, okay, interesting. Red flag, question mark. I'm not saying it's a scam. Keep that in mind. I'm just asking questions. We got somebody else here. Haven't really looked into his biography. Fine. Okay. Question mark. And then here's the next one. And there's typos on this website as well, which are quite irritating. I've been trying to find this one here. This is Eurosex. Doesn't exist. It does not exist. Okay. This exists. Eurasian Economic Union exists. Eurosex doesn't. It does not. There is a Eurexis, Researchers in Motion by the European Union. Okay, great. But I've asked Google about it. Let's share this here real quick. So Eurosex, Eurasian Economic Union is like, who is this? Eurosex isn't the official name, but likely refers to Eurasian Economic Union. Okay, fair enough. Like, where does this come from? So there are a lot of little red flags. I'm just a little fact checking. I'm quite pragmatic. And again, doesn't mean that this is completely off base. But I did want to share one more thing. Or two more things, actually, on this. One, and there's spelling mistakes on the website, which reminds me of the emails you get from the Nigerian prince who wants to give you $1 million, right? But only you got to send them 10,000 euros first or something like that. It's like the launch tracking. Like, I'm not trying to make fun of it. I'm just trying to understand what is happening. Like, really trying to understand. When I start reading this and I stumble over, like, spelling mistakes, it leaves a bad taste in my mouth, okay? It doesn't scream professionalism. Then, they're calling it a pumpkin batch. Contains the first 100 units, ghostly minted. whatever ghostly mint it is, on October 31st, 2025. Okay, that is actually 2 weeks before this announcement, before the Irias announcement. About 2 weeks, 10 days before this announcement, right? So, okay, another inconsistency that I'm trying to make sense of. And so they've launched a basket. This all looks fine. Like I haven't done the math on any of this and conversions and all of that. Absolutely. There's a BRICS currencies in there. You get the Brazilian real, the Chinese renminbi. You got the Indian ruble, the ruble, and of course the South African rand. So pumpkin batch has been minted. It contains 5 fiat currencies and 40 grams of gold. Okay, so that's an ounce of gold, right? Over an ounce of gold. So what I'm trying to understand, and like people have been, and maybe I'm confusing this, is that the intention is to use first funding proceeds to mint our Swiss hub, the first real primo mill batch of 1,000 units. So we're not doing a token, we're actually doing physical coins? Again, a lot of question marks. I'm not trying to say that this is just. I'll need to get Andy Schechtman, and maybe I'm trying to get Vince Lancy on the program this week as well to see what this really means. I'm thoroughly confused by it, quite honestly. Is it a hoax? I have no idea, but it does feel like there are some other interests at play, and I cannot shake that feeling. So I'm really curious. I'll definitely follow this very, very closely. But that's my opinion. So. Don't shoot the messenger. I'm just trying to understand what is actually going on. So that's on that part. Definitely want to take a closer look at some of the other news we got on the gold side. And I bet you the conspiracy theorists are going to be absolutely furious because... And here we go. Let me share this. The CFTC has announced that they're delaying the reporting of the COT reports, the Commitment of Trader reports, and people are furious with this because of the government shutdown. The authorities claim, or due to a lapse in federal appropriations following the return to normal operations, the CFTC will resume publication of the Commitments of Trader reports in chronological order. That said, we're still waiting on some reports here. So the report from October 28th is supposed to come out was supposed to come out yesterday. I didn't check whether that's true, but we're lagging behind by over 6 weeks. And as we all know, a lot of traders and market participants in the precious metal space rely on these reports to position for the week ahead and say, hey, this is what the big players are doing. They're long, short, they're reducing their positions in either direction. How do we position ourselves? So this is causing quite a bit of ruckus. And we don't even need to talk about the cooling system failure at the Comex in Chicago, do we? What was that all about? That's an interesting topic all by itself. Again, opens doors wide. What is going on there, right? So, central bank buying has also picked up. I've just quickly prepared something here from the World Gold Council. I really like using their data. So, central bank buying has picked up. By the way, they published that report December 2nd. You can just go to gold.org and find the full report yourself. Central bank buying has picked up in recent months. Here for a month of October, it has picked up. So year-to-date reported net purchases through October total 254 tons. But, and that's what a lot of reports don't report, they all jump on. It's like, central banks have been buying very aggressively, but we're actually lagging behind previous years. If you look at this chart by the World Gold Council, and not by much, we're not lagging 2024 by much, but at this time of year, gold purchased by central banks were much higher. So, okay. No concern or anything, but it doesn't. I noticed that it's not being reported, or that chart is being ignored by the media in general, like not just mainstream, all media. Then National Bank of Poland re-entered the market in October, having paused its buying since May, but they just announced that they bought another 16 tons in October, so that's fun to see. And National Bank of Poland extends year-to-date buying in October. They were the biggest buyer, of course, in October. And one thing's like I can't find any more data on it, as Germany apparently is still a seller of gold. Drives me nuts. I don't get it. But everybody else, you can see it here. So that's supporting and giving us a floor on the gold price. And we haven't really looked at the gold price yet, have we? Here, let's bring this up. Let's take a look at the year to date. Look at this gold chart. we've really nicely recovered. We bounced off support here at 39.20 or 39.30, roughly at 39.25, and moved up nicely back again here to higher levels, 4,200. We discussed this last week, but we saw an acceleration in this upwards move when the Fed mentions, hey, or the Fed governors talked about cutting rates here in December, and the Fed rate cut chances jumped from 30%, 35% to now 86, 87%. Let's take a look at silver real quick as well while I have this up. An absolute power move here, and I'll explain in a few short seconds here what Michael Oliver told me this week about what he has seen and why this momentum is so strong. Gold-silver ratio has dropped massively. As you can see, we're at 104.7 not too long ago, meaning in April. As I said, not too long ago, it was about 6.5 months ago, to down now 71. The trend, of course, continues to go lower. Let's take a look at 5-year. So where's the next level here? What should we be looking at? So here, it seems like there's a bit of a level. Again, I'm not a technical analyst, right? I'm just looking at some chart notations, markings here. But 64 is very likely. So that's an interesting move. Let's take a look at what Michael Oliver has shared with us this week. Go check out his commentary in my interview with him earlier this week. It's here, there you go. And how do I get this bigger? There we go. It's a little bigger. That's why I brought this up so you can actually read it. Major asset shift class has just begun. So his argument is, well, the asset move has only just started, meaning we have broken out. Gold has broken out versus the S&P 500 on a monthly close. So this is a fairly new development he mentioned on the program. It only happened at the end of last week when the month of November ended, and gold has broken out on a monthly basis against the S&P 500. That signals a massive trend shift, and we've seen that now in silver. Let me show you the silver chart, and we'll get to the miners in a second, but we've seen the same happen here in the silver space here in November. We have seen that breakout now, hence that massive spike in momentum of the last few days in the silver space. I thought yesterday momentum was so strong it took us to $59.30 in silver. We might actually almost touch $60 before the end of the week, but maybe I was getting a little bit ahead of myself because the silver price was up 3.5%, almost 4% intraday yesterday on Friday, the December 5th, and I think that's just a little too fast. Can we get this? I like the trend, I like the direction, but the momentum, the velocity is crazy. It's insane. So one other thing I've noticed, and maybe I'll show you something else. Let's stay on here real quick before I show you something else that I'm looking at. Is the XAU is a gold index and has broken out versus the S&P 500 now as well. So the miners will see another uptick as well if this trend continues, of course. But let's get rid of this. Let's add the screen again because I do want to show this here real quick. What I do want to show is just here GDX, GDXJ year to date. So we're approaching all-time high levels here, or high levels. Let's use the GDX. Let's see how far back we can go. Of course, the GDX is at all-time high levels, but we have been correcting here recently. And let's take a look at the last month, 3 months. So we have rebounded, but it hasn't really broken out or anything, and it hasn't really trailed gold and silver in particular. GDXJ just as well. It is in a sideways phase, and the stocks haven't really moved. And looking at my portfolio, the juniors in particular, the explorers, haven't really participated in what is going on. It's more the developers, the larger cap companies, of course, but not the juniors. So lots of information. I don't want to run too long here, but a lot of interesting developments that we're monitoring here at Soar financially. Please go check out our interviews with Michael Oliver. Dave Collum we're publishing tomorrow as well. I really enjoyed my chat with him. Make sure to go check that out on the channel. And then next week we've got a great lineup joining us as well. We got the Fed meeting looming on Wednesday. So exciting week ahead just before Christmas. I hope everybody's having a wonderful time. Enjoy the holiday season. Merry Christmas if you don't watch any of my other videos in the next few weeks. But much appreciate you watching. Hit that like and subscribe button, and good luck to all of us out there.